Today, Bitcoin drops below $70,000 to kick off the week. A federal judge dismisses Custodia Bank's lawsuit against the Fed. And Samir Kerbage of Hashdex discusses the asset manager's new spot Bitcoin ETF, which started trading in the U.S. last week. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Crypto prices in the red to kick off the month and the new quarter. As of noon Eastern, Bitcoin dropped 3%, falling below $70,000 after holding above that mark throughout the weekend. Ether fell nearly 5% to $3,400, and Solana tumbled nearly 4% to $188. Today's pullback has hardly put a dent in Bitcoin and Ether's massive first quarter, though. The cryptocurrencies soared 66% and 59% respectively, driven by ETF hype, growing crypto optimism, and more. Now, this new quarter has more potential catalysts too. The Bitcoin halving is just a few short weeks away, and that will tighten the Bitcoin supply by cutting the reward paid out to miners in half. There's also the potential for rate cuts coming from the Fed, which is typically good news for crypto markets. But there are also some uncertainties in Q2. We're keeping an eye on the SEC, which is set to decide on spot Ether ETFs. The chances those get approved are much less certain than the Bitcoin ETFs back in January. Okay, let's talk about the top stories. Pomp Investments founder Anthony Pompliano joined Squawk Box this morning, where he discussed Bitcoin's performance, crypto investing, and the upcoming halving.
We just hit a really important milestone before the halving. We just had the highest weekly, monthly, and quarterly close for Bitcoin.
Right.
And so the last 4 times that that's happened, Bitcoin has appreciated at least 300% through the rest of the bull market. Right. Doesn't mean it's going to happen again, but to have that happen before the halving, it's kind of like the demand shock happened. Now we're going to have the supply shock. Right. And so it's hard just to see how the price doesn't continue to go up.
Next, a federal judge dismissed Custodia Bank's lawsuit against the Federal Reserve. The Wyoming-based digital assets-focused bank sued the Fed back in 2022 after the Federal Reserve Bank of Kansas City delayed a decision on Custodia's application for a master account. That's basically a bank account for banks. Then, in 2023, Custodia amended its complaint after the Fed denied the bank's application completely, citing fundamental concerns. Well, on Friday, a Wyoming judge upheld the denial, saying that Custodia wasn't entitled to a ruling ordering the Kansas City Fed to issue a master account. Now, Custodia still holds a Wyoming bank charter, but it's a major setback for the bank looking for more direct access to the U.S. money supply. Now, we reached out to Custodia for comment, but haven't heard back yet. Last, Craig Wright, the Australian computer scientist who claimed to be Bitcoin investor Satoshi Nakamoto, had his assets frozen by a UK judge. Back in March, a British court ruled that Wright is in fact not Satoshi and ordered him to pay more than $7 million in court costs. Well, last week, a UK judge endorsed a worldwide freeze on his assets to ensure he couldn't move those funds offshore. Wright had already shifted some of his assets from London to Singapore after the trial, which the judge cited as part of the reason for endorsing the order. All right, for our main story, Hashdex became the 11th asset manager to enter the crowded spot Bitcoin ETF field last week when the firm's new ETF started trading in the U.S. I spoke with Samir Kerbage, CIO and head of products at Hashdex, about the new ETF and what makes it different from its competitors. So back in January, the SEC approved 11 spot Bitcoin ETFs and 10 started trading here in the US the very next day. Yours only started trading last week, more than 2 months later. And so the big question is, what was behind the delay?
Yes, that's a great question. So first of all, it's important to note that this product has already been trading since 2022. So we launched the Hashdex Bitcoin Futures ETF back in 2022. And the main goal we had of this product is that its structure would allow it to be converted to spot whenever the regulators were comfortable with it. So that's what we did throughout the last few months. We started a conversion process to make it a full spot Bitcoin spot ETF. That process took a little longer because this fund is differentiated from the other funds, has some characteristics that makes it different from the other funds. One very important point is that it's also allowed to trade Bitcoin futures contracts, and I can talk a little bit about that later, but this makes the product be a little bit different than others, and it needs the review from the National Futures Association. So we had to go through multiple reviews from regulatory agencies. That's why it took a little longer than others.
So, do you feel Hashdex is at all at a disadvantage because your spot Bitcoin ETF is the last to hit the market?
Yeah, not at all. Of course, like we'd love to start like along with others, but we are long-term focused. And we see both this product and the Bitcoin investment as a long-term game. So we believe that over the next few years, there's going to be a lot of space for growth. We're very happy to have this product available in the US and to have an agenda to work with regulators to like potentially bring new products to market. So we think this is the big first step that we've done in the US. We've been like offering crypto investment products and ETFs outside of the US for a few years now, more than 6 years. We have a lot of experience running crypto ETFs. So, I mean, we're very happy to have this product available and looking forward for the coming years.
So, as you mentioned, Hashdex has extensive experience running spot ETFs in several regions around the world, including Europe and Brazil. What else makes your product stand out? How is your spot Bitcoin ETF different than your competitors? And you touched on this, but I understand the newly converted fund will invest at least 95% of its assets into spot Bitcoin, while up to 5% of the fund's remaining assets can go into CME traded Bitcoin futures contracts and cash, as well as cash equivalents. Can you explain how your product works exactly?
Sure, sure. So this product is different from others. Like the other products are a grantor trust. So they're only allowed to hold Bitcoin. And this causes a problem when you're handling cash creations and redemptions, which is what the SEC has allowed so far. And we introduced the solution of using the futures market, the CME futures market, which is a highly regulated and liquid market, to make a more efficient cash creation and redemption process. And after we hold the futures position, we can convert that futures position for a spot position on Bitcoin. So the goal of having this small allocation to futures is to allow an efficient bridge between cash coming from creations and redemptions and spot Bitcoin. So that's the first big difference of this product. It needs to have at least 95% allocation to spot, but it can have more depending on the flows we see on a day-to-day basis. And this is not uncommon for ETFs. It's important to highlight. There's a lot of other ETFs like S&P 500 ETFs that are allowed to have up to 20% allocation to futures. And they do this to allow it for a more efficient hedging of cash in the portfolio. So that's kind of normal for the ETFs. We're introducing this as an innovation for Bitcoin ETFs. And another big difference of this product is that it has a different custodian than most of other products out there. So the first custodian for this product, the primary custodian, is BitGo. And we believe that over time, especially institutional investors and financial advisors will value this diversification of custodians.
So clearly, there is a lot of competition among the spot Bitcoin ETFs here in the US, with 11 trading right now. So, do you see consolidation happening, and what will it take for the products to survive?
Yeah, so I think it's the first important thing is to look at the long term. So crypto focused asset managers like Hashdex will look at this product as a long term game, and as part of like a big offering that over the coming years will be built around crypto. And we really value the relationship we have with financial advisors and institutional investors. That's what we do. That's what we've been doing for the last 6 years, mostly outside of the US. And that's what we start to do now in the US. So I would say the crypto focused asset managers will look this at a long-term as a long-term game. Maybe other managers will see this more like a product getting profitable or raising certain assets. Otherwise, they would shut down the product. But the way we see this is as a long-term game.
Now, you wrote a piece last month about what's next for Bitcoin. In it, you acknowledged that you didn't anticipate the crypto recovery would happen so quickly. You pointed to a few factors converging to create a, quote, perfect storm for Bitcoin. This includes positive macroeconomic factors, the upcoming Bitcoin halving, and the launch of spot Bitcoin ETFs, which caused a seismic shift in demand. Can you elaborate on those factors?
Sure, sure. So the first one was a big surprise. So we had, of course, like positive expectations for inflows on Bitcoin ETF, but I can say right now that the inflows we're seeing so far are way bigger than the most optimistic investor would think about. So this is creating a shock, a demand shock on Bitcoin. So it's a kind of demand that we never seen before in Bitcoin. We've seen this before in other countries. Like I said, we've seen this in some countries in Europe. We saw this in Brazil. We saw this in Canada when the ETFs were introduced. But the US capital market is just so big, and in other it has other orders of magnitudes in terms of demand. So we've seen a huge demand shock coming from those ETFs. In less than 1 month from now, we're going to have the halving event on Bitcoin, which is when the basically the inflation rate of the network drops by half. So we're already seeing an imbalance between supply and demand, and that's only going to grow after the halving. So this will create a situation where we're going to have a demand shock and a supply shock at the same time. And the macro environment is helping, is positive for an emerging digital store of wealth like Bitcoin. So, I mean, we're very optimistic about the next 12 to 18 months. We believe that we are starting another bull cycle. And I mean, it's going to be wild.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.